you can see that the offers are refreshing a lot more than the bids. The offers are refreshing a lot more than the bids, and that tells us that there's a really good high probability that the buyer is going to get jammed up here. And obviously, if the buyers are going to get jammed up there, we can start to see it, we can spot it, we can start recognizing the buyers getting jammed, and that's real money liquidity perhaps pouring back in behind this, and that sells off on this book here. You can see that that improvement in the red over green adds these offers into these candles. It doesn't matter how you see it. It's the fact that you do see it. It's the fact that you recognize that that's what's happening. But the candles don't tell you about total liquidity. This was a question that Samans asked yesterday, is that it's all right seeing these red candles, but it doesn't tell us what total liquidity is doing. It's the difference between the two that creates the red candles. To see total liquidity, you've got to see this chart at the top edge. So that's why I put this chart on. You can see that liquidity is either bullish or bearish. You can see that liquidity is increasing or dropping. In other words, liquidity is increasing. Liquidity increasing means a drop in volatilities. A drop in volatilities usually means a reversal trade. And a reversal trade is something we start looking for as a possible outcome. A reversal trade is something we start looking for as a possible outcome. And obviously in line with that, we can start to see the total liquidity on the inside market versus the book liquidity on the big market or whatever. We can start doing lots of different types of calculations, and we can start making some big calls based on those stories. So pretty easy stuff, guys. Pretty easy stuff to get your head around. It's just a case of doing it. It's a case of putting in the work and looking for the right outcomes. So you can see that with the addition of liquidity coming in as the price drops down, it's nearly all sell side. The price gets jammed at the top edge. We make an easy 20 ticks profit on that deal. The calendar is still very bullish. I don't want to stick around on the short side too long. And the market has gone back up again into that retested high that we talked about probably happening anyway. And good news, it did happen. And guess what happened? We got some sell business off the 40s. Who would have thought it, guys? Who would have thought we would have got some sell business off the 40s after talking about getting some sell business off the 40s? It's pretty easy stuff, isn't it, guys? Pretty easy stuff. I mean, I even drew a line in for you guys. Come on, seriously, what the hell? We drew a line in for you at 87.40. The price traded 87.40 and dropped right back off to 20. Another 20 tick profit, another profit in the book. But then the supply is changing into demand. Don't want to overstay my welcome. Happy to take 20 ticks and get a stop in at break even, guys. Happy to take 20 ticks, get a stop in at break even, and then just see what happens next. When you've got a positive calendar spread, and at the moment the calendar out through the what am I going out to M contract out through M is at $4.70. It's a strong calendar at $4.70, guys. You want to be you don't want to be overstaying welcomes on short trades. You want to be in the short, you want to be out the short as fast as you can. As soon as you see any value divergence, you want to be out those shorts back into that long trade. We covered it in the classroom yesterday when we talked about the banker bets. If you're trading with the banker bets in line with the direction of the slope, you want to stick around for those trades. If you're trading against the banker bet, so you're trading with the slope, but you're trading against the outright number, then of course you don't want to be hanging around because you're trading against the net volumes. You're trading against the net volumes. So make sure you never lose sight of the fact that the calendar spread doesn't just give you a direction, it gives you a number as well. It gives you a total value. It's positive, in which case it's in backwardation, or it's negative, in which case it's in contango. So the 40 sell, currently trading 24s, 23s. I've taken another little bit of business against it. We saw some good solid book selling coming in behind. And yes, I did execute against that book selling. And yes, I have made some nice money. This time I took the trade a little bit higher than it was the last time, but that's okay. You get some good money off that top line. We've not seen a breaker yet, but because I've managed to get some reasonable size on the trade, it's certainly making me some good cash. 40 now trading 14s, guys. 14s now trading. Well done, anybody that understands this process. But again, don't overstay your welcome. But this time we do have a little bit of supply coming in behind this trade, which is great news.